Hey, it's Ann Alexander with Exit Coast Real Estate Pros here in Myrtle Beach. We're going to start diving into your first-time homebuyer questions. So stay tuned and let's get rolling. Hi, it's Ann with Exit Coast Real Estate Pros, and Ann sells the Strand. Today we're going to be talking to Rachel Pitts. She is a mortgage loan officer with U.S. Mortgage here in the Myrtle Beach area, and she's going to be letting us know the different types of mortgages that are available. So let's head on over and chat with her a moment. Hi, this is Ann with Exit Coast Real Estate Pros with our first time home buyer series. And today we are talking with Rachel Pitts. Rachel is a friend of mine that is in the mortgage business. She's a former realtor. She was a realtor for over 10 years, and she's made the switch over to the mortgage field. And I just thought it would be great to have her come on and we can kind of get to know her and get a few questions answered. So Rachel, tell us a little bit about yourself.
Hello. Thanks so much, Ann, for bringing me on today. I'm Rachel Pitts. I'm with U.S. Mortgage Corporation in Myrtle Beach branch. And U.S. Mortgage has a branch in just about every state of the union, and I'm licensed in several states. So you can call me pretty much for any loan anywhere, and I'll find you somebody that can help you if I can't. And I find it really fun to be on this side because I know how it feels to be in Ann's seat, where working with buyers and how all the things that the realtors go through in helping a buyer to purchase a home. And now I'm on this side helping everybody get financing. So there's a lot of steps involved in the home buying process, and there's a lot of steps involved in the mortgage process as well. So hopefully we can make it a little bit more clear, and it'll be an easier process for any buyer out there watching this that once they start the process with us.
That's great. Thank you. And I appreciate you being on with me today. Like I said, we're going to just kind of go through a couple of questions that I had for you. First is, what types of mortgages does your company have available for a first-time home buyer?
Well, first-time home buyers have a lot of great options. A conventional loan is the most simple kind of loan, let's say. And if you're a first-time home buyer, then in a conventional scenario, you can get away with a 3% down payment, which is a lot of fun. If you have already purchased a home before, then in a conventional scenario, what you want to go for is probably a 20% down payment so that you can avoid mortgage insurance, which mortgage insurance is basically a fee that is attached to your loan until your loan is paid and up until the 80% loan to value. So if you put that 20% down payment in a conventional loan, then you won't have any mortgage insurance. As a first-time home buyer, if you put down that 3%, then you would have the mortgage insurance until you get to that 80% mark. And it can sometimes be $150. So, you want to get out of that as quick as you can. Okay. Conventional, let's see, down payment, like I said, varies. And you will need to try to get a 36% loan to value ratio if you can, which means your loan to value ratio is, your 36% debt to income. Your debt to income is how much debt you have, like your credit cards and your car payments and your any other liabilities that you have as compared to how much income you have. 36% is what you want to go for, but we can get it done with a higher debt to income. And really fun fact for you to know, especially working with your realtor, is when you are negotiating your sales price, you can get up to 3% of closing costs paid by the seller in a conventional loan situation. So keep that in mind, because sometimes it'll help your cash to close that you need to bring to the table. So that's conventional. FHA is a government-backed loan, and the mortgage insurance on an FHA loan is there for the life of the loan. So an FHA loan can be advantageous to a borrower. It's a 3.5% down payment requirement, but there is that mortgage insurance that is there for the life of the loan. So if it turns out that an FHA loan is the best option for you, you can always refinance later and get rid of that mortgage insurance, but it does stay attached for the life of the loan. Your debt to income ratio needs to be 43% at the max. And if you want to try to get those seller closing costs for an FHA loan, you can get up to 6% from the seller. So that's FHA. Let's see. And VA loan is probably actually the best loan out there, but a VA loan is reserved for only our veterans. And it's the best loan because it's a great way to thank all our veterans for their service. You can get 100% financing for a VA loan. So it's also advantageous. The only catches to that is, number one, it cannot be a second home. It's got to be your primary residence. And of course, we need to get that proof from the VA that you are, in fact, one of our nation's heroes and that you did serve in the military. There is, even though it's a 100% loan, there's a funding fee that goes along with it, but sometimes you can waive that fee depending on your status. And we want to make sure that you have at least a 41% or at most a 41% debt to income ratio. And lastly, you've got a USDA loan, and that is also a government loan that's 100% financing. And that type of loan is reserved for certain areas. So in our area, in the Grand Strand, Conway or Georgetown are going to be areas that probably would qualify for USDA. And the reason that it is limited to those certain areas is because the USDA loan is used to promote rural development, they call it. So sort of wanting to promote those rural areas, which if you live in Conway, it's not necessarily super rural, but that's one of those areas that qualifies for USDA loan. Again, it's a 100% loan, which is really great. You can get unlimited seller contribution towards your closing costs, which is also fantastic. And your debt to income needs to be about 41%. People love those, but it definitely, you can't get a USDA loan downtown Myrtle Beach in the city.
Well, darn.
People will try. They always ask. Yep. Well, and one thing about these 100% loans, that USDA loan, it doesn't mean that you can come to the table with like $0 in your bank account, because we will want to see some reserves in your bank account to make sure that you can, in fact, pay this loan back.
Right. And that's a great segue into my next question for you, Rachel, is what are the eligibility requirements? I mean, I know you want to see a steady income. You want to see them in the same type of job. It doesn't necessarily have to be at the same company. I mean, because sometimes, especially here, we get a lot of people that relocate from different areas. So let's say they're a teacher in, North Dakota. If they transfer here as a teacher, does that still apply for their eligibility requirements?
Well, in terms of the teacher from North Dakota, if you have been a teacher and you get employed here in South Carolina, we would want to see a letter of engagement and see that your income would be comparable to what you were doing before or more, so that we can see that you're going to be able to pay back this debt. We like to see, and right now, at the time of the filming of this video, we are still being affected by some new restrictions and guidelines from COVID-19. So before COVID-19 happened, there was different eligibility requirements. Example, used to be that if you had a 580 credit score, then you'd be good to go for an FHA loan. Right now, pretty much, our company and a lot of companies are looking for a minimum of a 640 credit score, which is a little rough for a lot of people. Anything lower than that, it's tough to do. Not to say it's not possible, but it's tough to do right now. The other thing is we want to see a 2-year work history. So it doesn't necessarily mean that you had to stay in the same line of work. We just want to see a 2-year work history, consistent work, consistent, similar income. And of course, there was last year in 2020, from the time of the filming of this video, a lot of people were out of work. So if there was a period of time that you were not working, then we'll need a letter of explanation, just detailing out what happened, why you were not working. And any time outside of COVID, maybe you had a surgery or maybe something happened and you lost your job and you're looking for a new job. We just need a letter of explanation so we can see that to your work history. Also, we want to see some assets. We want to see that you at least have enough cash to close, of course. And then self-employed borrowers, this one's a tricky situation. So if you are self-employed, or you work 1099 as realtors do, then we need to see that you at least were working for 2 years. If you just started, you were working W-2 and you just started working 1099 last year, it's real hard to get it done because in order to utilize that 1099 income, we've got to see a 2-year history. And self-employed is very, very slippery and tricky right now during COVID. And lastly, there's just a bunch of extra hoops to jump through with COVID-19. Just verifying employment. Are you still employed? There'll be verbal verification of employment right up until closing, sometimes the day before closing, just to be sure everybody still is working and doing their thing. Now, if you are retired and you don't have employment, but you have that Social Security or your pension income, or you have some sort of disability, or even alimony, child support, we're going to take all of that into consideration for eligibility.
Perfect. Okay, great. With the eligibility requirements, I know with, at the time of this video, we are dealing with COVID. What if somebody is no longer going into the office, but they're still doing their job at home? Does that affect anything?
No, that's okay. The way that we verify employment is we generally find either there's an entity called the work number that some bigger corporations use that we can go in and verify their employment, or we get the phone number of your manager or someone in HR so that we can verify that you are in fact employed. And likewise, we like to gather those most recent pay stubs so that we see that you're employed. But like you said, Anne, a lot of people are working at home, and that's no big deal as long as you're still bringing home those paychecks.
Okay, perfect. Great. Appreciate that. And then I kind of want to go back a little bit. You were talking about my part of this for the buyers, where I can actually negotiate those selling costs, the selling. And I wasn't honestly aware that I had a cap. So that's really interesting to know on my end, for my buyers, that I do, obviously I do always negotiate that. But now knowing that I have a cap really kind of puts a new little thought in my brain, because I honestly had no idea that I had caps on those. So thank you for that for me.
So one more to reiterate. So on a conventional loan, you can go 3% of the sales price. In an FHA, you can go 6% of the sales price. I forgot to mention VA, you can go to 4% of the sales price.
Okay.
And then USDA is unlimited. And it's kind of a nice way for a borrower who wants to keep more cash in their pocket.
Right.
Sometimes you can go stay a little closer to their asking price and then get those closing costs. So they're actually netting a little less than it seems, but it's really helping out that borrower.
Right. That's great. Yeah, no, I appreciate that, because I do that all the time for my buyers, but I had no clue that there was even a cap. And I usually don't do a percentage. I do it like a physical number, up to a physical number. So yeah, that's interesting. So thank you for that.
My pleasure.
All right. So the next question I have for you, Rachel, is about the down payment. And are there any options? I mean, I know that some of my clients in the past have had to borrow funds from the family. So, there's gift letters involved and different things. And then I've got other clients that have, let's say, a 401k, or their investments, maybe they're not in a 401k, but their investments are in something else and they're taking money from that. Is there any documentation that you need for those, or what goes into the down payment, and how much are my buyers looking at to put as a down payment?
Okay. So down payment amounts, again, for conventional, if you're a first-time home buyer, it's going to be 3% down payment plus your closing costs. So you want to make sure you calculate that you're getting that 3% and then adding on I usually say a safe bet for calculating what you're gonna need to have is to calculate that 3% and then double that for your closing costs. So that way it's probably gonna be more than you need, but it's a safe bet so you have a little bit of reserves, because we don't want anybody to come in and use their very last dime to buy a home, because then you're left with nothing. And it's just never a good scenario for people, because you're gonna have to buy all kinds of things as soon as you buy a house. So 3% for a first-time home buyer for conventional, up to 20% or more. You can put down as much as you like for conventional. FHA, you can put down that 3.5%. VA, USDA are 100% loans, but you will need to cover those closing costs. You can get gift funds for a conventional loan. You can get gift funds for an FHA loan from mom and dad, grandma, grandpa, your buddy, whoever. You cannot get gift funds outside of your own home for VA or for USDA. And what that entails is we basically need a gift letter, which actually we put together for you and send it out to you, and you guys get all the signatures. We do need to track those funds, just verify where they're coming from whomever. Say mom gave you the money for down payment. We're going to need to get her information from her bank account showing those gift funds coming to you, and then showing the gift funds coming into your account. That's just documentation that we need. But it is possible. Now, in terms of somebody that has their money in investments or 401ks, that is also possible. It's definitely what a lot of people do. So if that's what you're planning to do, I would recommend just call up whatever company that you have your funds with and find out, are there any penalties for you taking those funds out to utilize for a down payment? And what is the process? Because sometimes there's a process and a delay, and you don't want to find that out at the last minute when you're trying to gather up your assets and perhaps cause a delay in the closing.
Okay, great. All right. So it's interesting that the VA and the USDA cannot have gift funds. Why is that? Just out of curiosity.
Well, the VA, we want to keep everything just within the VA's family, because it's, we're servicing the veterans, and they're both government loans, and that's just part of their guidelines that it's not applicable.
Okay, great. Is there anything else that you'd like to give my first-time home buyers in this series? Any kind of words of wisdom?
Yes. The words of wisdom are this. If you are thinking of buying a home, number one, give me a shout first before you get Anne to take you out to buy a home. And I remember when I was selling real estate like Anne, that people would call me up and I learned to say to them, have you spoken to a lender yet? Are you buying cash? And they'd say, oh, well, I just want to find the house first. And in today's environment, especially, there's not a lot of inventory. So number one, you don't want to show up and find your dream home and don't have a pre-approval in hand, because you will not get the house. But number two, you want to make sure that you know what you're working with. You know what your budget is, and you know that you can afford the home that Anne is taking you to see. And also, if we talk prior to going out and looking at homes, we can identify any pitfalls or any issues that we have that we need to work through first. That's the first part. Do that first. So secondly, if you are going to give me a shout, just start keeping this in mind. We're going to need the last 2 years of your tax returns. If you have a business or you're self-employed, we need the personal and the business tax returns. We need the last 30 days of your bank statements for personal and business. We need to see your last 30 days of pay stubs. We need to see your driver's license. And if you are collecting any type of pension or retirement, we need information on that. We basically need everything. So people sometimes scramble when we ask for that. So I always like to put that out there, that those are the basic documents that you need to gather together. And we need every single page, even the pages on your bank statements that say this page left intentionally blank. We need that too. We need all the pages and all the pages of the tax returns. So just, if you don't have all that sitting on your desktop, like someone super organized, then just start gathering that stuff together, or talk to your accountant so you can make sure you have all those documents for us, and it's not a panic once you've found your dream home to try to gather all that stuff.
Great. All right. Well, Rachel, I really, really appreciate you joining me today. And hopefully some of the people watching will give you a shout out. Do you want to, I'll put your contact information in my description, and they can reach you that way. But I really appreciate you spending some time with me today.
Thanks so much. The easiest way to find me is you can go to thesinginglender.com, and it'll take you to all my info.
Yeah, there we go. All right. Thank you, Rachel. Hey, well, Rachel gave us a lot of great information today, and I really appreciate her being here. Again, I will have all of her contact information in my description below. And next week, we're going to be talking to another lender in my sphere, and we'll see what they have to say. I'll talk to you later. Have a great day.